We have with us our next guest. We have Sanjiv Bhasin, Executive Vice President, Markets and Corporate Affairs at India IIFL, joining us from Mumbai. Hi, Sanjiv. The rally of disbelief just continues. You are pretty bullish on the markets. Do you think they're good for more, or should one be cautious now?
Yeah, hi. Well, Anisha, so markets always climb, walls of worry, and you had that bout of fear at 7,900. We were one of the few who stuck our neck out, and it's paid out. We've been richly rewarded. But, given that we are at new highs, I would expect a little bit of consolidation. However, given in the short term, maybe we are overbought. We could see corrections. But we continue to think that the next, at least 2017, will see much higher levels, and the next 3-4 years are extremely bullish for equity as an asset class. So like we said, we think you should have an SIP approach and don't try and time the market, because you'll be surprised on the upside. So use all declines to buy, but have a slightly longer term view, because the initial wave may have already played out. So you could see some profit booking, stroke consolidation, and time bound correction. And like I said, you'll have to increase your horizon to encash more gains from these levels.
What does that mean in simple language, Sanjiv? What are the levels you're watching out for, and how much more time will it take for the Nifty to get there?
Well, new highs are going to be here by the 10th of March, before the election results are out. I definitely think new highs are a matter of just time. It's not when. However, after that, you could see some consolidation, stroke correction, depending on the macros, depending on some volatility because of the UP election results. But we think that, at least a 10% upside in the next 6 months is definitely on the cards. We are of the view that the Nifty at the end of the year could be closer to 10,500, 11,000, given that the under ownership, participation, and the improving macros, with the remonetization now playing out on the positive in the next 6 months.
All right, so end of the year, even 10,000 perhaps coming on the Nifty. What are the spaces or the stocks that you like the most, Sanjiv? Previously, you've given calls on stocks that have proved to be multi-baggers. Are there any now? End of the year, your targets for the Nifty are still pretty high. What would be your top bets?
So it's difficult to take out multi-baggers now, but we still think that, the broader market participation, particularly the mid-caps, there are a lot of ideas there which can be outperformers. Just to name a few, we are very bullish on Karur Vysya Bank. We think at one-time price to book, and given the strong NIMs which they've showed in the south, this bank franchise is very well poised for at least a 20% upside. We are very bullish on Godrej Properties. It has been one of our top picks all the way from 290 level. We still think the results were par excellence, and having pedigree management with execution being the key, we think Godrej Property is going to give you a 30% upside in the next 1 year. Another stock where we are very, very bullish is Satin Credit Care. Even though the stock has run up from 350 to close to 450, we think this is a 650 rupee stock with a 1 year perspective. Within that, you can also add a Suprajit Engineering on the OEMs. It is one of the largest players. It has a 65% market share on the cable market on the two-wheeler, and it's now diversifying into the four-wheeler side, with the added kicker being that the acquisition of Phoenix Lamp will give it a huge market share on the Halonix market. So these are four, on-the-spot ideas which we are very, very bullish on the mid-cap front. We still think cement, materials, and banks could be proxy to good credit growth and expansion on the low-cost housing, where the theme could be, where materials could be outperformers.
Okay, so you're still betting on the material stocks, but Sanjiv, some of them have already moved up quite a bit, even in the cement space. How would you then balance returns versus valuations versus risk? What are your top bets in the material space?
Yeah, so if we were brave enough to stick our necks out at 3150, 3200 on Ultratech and 190 on Ambuja, we reiterate that when they get into a slight bit of a correction, you start to invest there. Because we've already seen that large part of the petcoke prices up move may have played out in the margins. We think petcoke prices may stabilize or fall. And secondly, they've got the pricing power. We've seen prices being raised per cement bag, especially in east and north. And I think there will be a follow-through, given that commodity stocks are on a tear globally. So in cement, we continue to be bullish on Ultratech, Ambuja, and in the mid cap, it could be JK Lakshmi Cement. On the ferrous, non-ferrous, we are very, very overweight on Tata Steel and JSW Steel, and we think Hindalco is the best poised play on both the aluminium and the copper side going into the 2017.
All right. You've given us your top bets from cement, from steel. What would you do with telecom, Sanjiv? Again, today we've seen Idea is up 6%, Bharti was up 10%, Reliance was up 10%. Would you think now's the time for telecom, or do you think you'd wait for some correction? How do you view this space?
Well, Anisha, it also tells you that whenever valuations get totally downtrodden, as in the case of Idea Cellular at close to 65, you've seen the stock become the best performing stock in the space of just 2 weeks. And it tells you that the merger will play out perfectly. Reliance has exhibited that given the franchise and Jio, they are garnering a huge amount of subscriber base. And we think Bharti is very well poised on the back that their payment bank and now this recent acquisition of Telenor should pave the way ahead. So you will have to bear the short-term pain because of the, the price cut effects which will hurt the bottom lines. But 2 years down the line, this could be one of the best spaces to be in, given the advent and more reliance on data, on digitalization and on the apps usage. So we have an overweight of Bharti all the way from 310. We reiterate a target of 425. We were surprised by the up move in Reliance and Bharti in the last few days, but it tells us that how much of under ownership and how much of low participation there was, particularly in telecom and the Nifty as a whole.
All right, so you remain positive on the telecom space. Now, Sanjiv, you said that when valuations go completely out of whack with what the price is pointing to, it's a good time to buy. For telecom, the earnings visibility wasn't that great. Now, the same case was somewhat similar case came in for the technology space as well, when the heavyweights like Infosys, TCS, HCL Tech, all of them corrected quite a bit. Now, do you think they've also offered they are now offering good opportunities for investors? Because the expectation is that earnings are going to be steady and not spectacular. Maybe earnings would be even better than what some of the telecom companies could manage. So what would you do with the heavyweight IT stocks?
Well, yes, that is the discrepancy of the market. IT and telecom were the worst performing sectors about a month back. And lo and behold, we actually have been relatively sanguine on the IT stocks, and we were recommending buys closer to Infosys at 920 and 2200 on TCS. In fact, TCS, HCL Tech and Infosys were our top 3 picks on the back that we thought inorganic buyouts or buybacks would be the key given the extent of cash which they have on their balance sheets. And once Cognizant set the ball rolling, I think TCS has, given us a lot of conviction that the management seems much more bullish than what the rest of the street is. They've put their money where their mouth is, and it's put a floor to the valuation of the IT bellwethers. Also, we think that a large part of the rhetoric on the Trump and the regime in the US may be overplayed. We don't think the IT, the H1 visa will be played out as badly as most people perceive. So if anything comes on that would be the silver lining. We would definitely recommend at least a 25% weightage in IT, given the extent of, a good proxy to the rupee weakness and the huge cash on balance sheet, which can be used to shore up return on equity going forward.
All right, now the markets have slipped quite a bit and are absolutely flat. Let's just pull up a few stocks that have dropped over the last 5-10 minutes and quite on high volumes as well. Dish TV. Dish TV is a stock that has seen 6.5 million shares being exchanged, and it's suddenly dropped. It's now at 93 rupees, down 1%. We've got Arvind Limited at 370 rupees. That's also slipped. We've got Tata Power seeing 4 million shares being exchanged. Tata Powers has also moved lower. Let's pull up the intraday charts to show you how other stocks have moved over the last 10 minutes. Tech Mahindra, 4 million shares being exchanged, that has fallen. Indian Oil Corporation getting into the Nifty soon enough, but that one has also slipped quite swiftly over the last few minutes. on high volumes. Ujas Energy. Now, Ujas Energy has been such a disappointment all day. Nearly 10 million shares have been exchanged for that counter. It's on the highs of the day, and seeing it's had a bad run today. It's still down 6%. We also have the likes of Engineers India slipping with volumes as high as 3.5 million shares, and AdLabs has had a stupendous move today, and today at this point of time is seeing a little bit of profit taking, but it is still up 10% or so. What would you do with some of these PSU names, Sanjiv, which you have previously liked a lot? NBCC, Engineers India, and what do you make of the move in REC and PFC in this most recent run? Do you think any of these offer good investment bets for investors?
Well, Anisha, if you recall, we've been extremely bullish on some of the PSU stocks. I mean, just to name it, the CPSE ETF, PSU ETF is up 52%. It's telling you that, the pessimism on only dividend paying stocks was overdone. 7-8 of them have given huge bonuses and have rewarded shareholders with a very, very positive outlook on the future. So yes, Engineers India, NBCC have been two of our preferred pick. We would recommend an overweight on these stocks given the environment and given the order book which they have for the next 4-5 years. REC, PFC, after giving a 1:1 bonus, have actually recouped that level of 1 year back. They've almost doubled. There is still a dividend yield of 7 to 8%, and we think the power utilities and the power financiers are in a very, very sweet spot. So any decline would be a buying opportunity. We would also include in that gamut some of the gas utilities, on declines. That is GAIL, IGL and Petronet.
Okay, so power financiers, gas utilities, all are looking pretty strong. What do you make of the move in the Bank Nifty? Again, the Bank Nifty reclaimed 21,000. You like Karur Vysya Bank. What do you do with bigger names like Axis or Kotak? There's talk of M&A action, or HDFC, HDFC Bank, we saw a big move up. What would you do with some of these kind of names?
So Anisha, firstly, Bank Nifty has made a new high before the Nifty. It's also telling us that maybe the best of bond yields on the treasury income may have played out for PSU banks, since bond yields have now started to harden. So I think treasury income will be hurt in the few quarters going ahead, because the RBI from being dovish has now sounded hawkish. On the other hand, we think credit is definitely going to expand in the second half and in double digits. So the private lenders will be in a very sweet spot. On declines, we would also like to be overweight on banks like State Bank, Bank of Baroda, Federal and ICICI, given that corporate lending asset books may have done a lot of the AQR stuff, and now they would be right backs as asset quality improves in the coming quarters. So like we said, if you want to play the proxy to the growth in credit, then I think the Bank Nifty becomes a very good conduit. We have been recommending an overweight on Bank Nifty and Nifty as an SIP, and we continue to say that these would be very, very good instruments to use an SIP to get in, because in the Bank Nifty you will get 6 PSU and 6 private banks, which will be proxy to excellent conduit to the growth in the economy, with credit expanding in the second half.
All right, so positive on the banks, but what about the PSU banks? You said the bond yield, treasury gains may now be history, plus they have the pile of bad debt. Would you still avoid them, or do you think the price to book is so low they offer an attractive investment bet?
I didn't get yours. I didn't get it. Can you repeat the question?
What's your call on the PSU banks?
Okay. Yeah, so like I said, the PSUs, the best of the bond yield may have priced in. We still think there is a fear on the asset quality deterioration, though large part of that may be addressed. And we've seen that the RBI has not allocated, as was expected, enough on the recapitalization. So in the time for the near term, there could be pressure on these banks, and they could be underperformers. And we've had the likes of Axis being an outperformer on the back that mergers are now key. So merger and acquisition activity picking up tells us that there is a lot of strength in the under ownership and the valuation of some of the banks, both on the private and on the PSU side. So for us, PSU banks become a good buy on declines, but you will have to increase your window of holding these stocks from 3 to 6 months to at least 1.5 years for you to make real gains on these stocks.
Right, have a long-term horizon for the PSU bank stocks. Thank you, Sanjiv, for being with us on NDTV Profit.